All right, all right, all right. Good afternoon, team. Good afternoon, good afternoon. Hope you're all having a wonderful, wonderful Sunday so far. Hope you had a great weekend, enjoying your time for Labor's Day weekend, and are ready for this short trading week ahead of us. Thank you all so much for joining us. We'll be going over the usual weekly watch list analysis, starting off with the economic calendar, weekly economic calendar. As we can see here, there is no market. And the reason why the market is closed on Monday is because it is a Labor Day holiday weekend. And there's nothing scheduled for that given day. However, heading into Tuesday session, we have the S&P 500 final U.S. manufacturing PMI. We have these numbers releasing every week. We got construction spending. This is going to be very key. And the reason this is going to be key is because it'll affect the XLI industrial sector here. XLI industrial sector closed over 1% on Friday's session, showing some weakness. And we will go over that shortly. We also have ISM manufacturing also releasing ahead of pretty much 1 hour before the market opens. 30 minutes before the market opens. And then heading into Tuesday, we have U.S. trade deficit. We have job openings, factory orders, and then we have some Fed speakers as well, starting at 2 p.m. EST. So that's about what time is that? 11 a.m. our time. 11 a.m. For those of us that are in the West Coast. On Thursday, we have ADP employment, initial jobless claims. This is going to be key. This will matter. This will be key here. And then we also have, let's take a look. We have U.S. productivity. We have S&P final U.S. Services PMI as usual. We have those data releasing, and then ISM services. And then on Friday, we do have more Fed speakers going on as well. And we also have the U.S. unemployment rate. This will be key. This will be important. Those two data that are coming out before the market opens, those are going to affect the market. But aside from that, we don't really have nothing that is really heavily going to affect the markets until we move on to the second week of September. Again, team, thank you all so much for joining us. I hope you had a wonderful week so far. And it is going to be an important week. The reason why I say that is because usually under low volume, we have two scenarios that play out. Either we're going to just rocket higher on low volume and then trick traders that'll say, oh, the market is not going to go higher. And pretty much they'll have their short position stop losses just slightly above all-time highs. And the market will do is it'll just rip right through all-time highs and trigger their stop losses and get one of the biggest, those big green candles pretty much on low volume, and then trick more investors or trick more short sellers to pretty much cover their positions that'll pretty much advance and propel the S&P as well as the other portfolios higher under low volume. And then there's the other times where the market ends up taking advantage of the pullback by, taking advantage of the short week by triggering a pullback, doing a shakeout, fake out operation, and then rallying back up, heading into the following week on starting with Monday session into the full trading week. So let's take a look at both of those scenarios for the S&P 500. I broke it down here on the weekly watch list. Make sure you're always going to the weekly watch list as well as market analysis so that you are up to date. Now, for this particular one, this is what we are expecting on the S&P 500. The all-time highs for the S&P for SPY is 565.16. And currently, we are trading at 563.40. 563.40 area. So with $2 away from all-time highs, bulls are pretty much breaking out of this bullish flaggish consolidation here. We have a bullish ascending formation, which is a bullish pattern, and we could even say we have a bull flag formation. So to show you an example of this bullish ascending formation, we can go to our chart. Let's go to bullish ascending formations down here. This is a bull flag. So even a bull flag, team, we can take a look at a bull flag as well, and we can say it can be a potential bull flag. But um, more detailed, we can take a look at this particular example, and it could be something like that, where we are pretty much we're forming a bullish ascending formation there, and we're getting ready to see some upward movement. I'm not saying the movement will be that strong, but it could trigger some breakout there, starting with the break of the all-time highs there. So uh, again, bulls are breaking out of this bullish flaggish consolidation and just one day away from testing all-time highs again from mid-July here, as we can see. And they can advance to new all-time highs, similar to the way that the Dow Jones Industrials has been doing. So if we go to the Dow Jones here, the Dow Jones Industrials, we can see it already placed new all-time highs above its above its July, and it's looking like bulls are going to continue higher and push the Dow Jones Industrials higher. So we're expecting the same thing to happen on the S&P 500 here. Bulls can step in and pretty much advance on the S&P 500 and break all-time highs above 565, with our first target being 570. So in a bearish case, let's say if we do have, in case of any bull trap, so a bull trap means that bulls are going to get trapped. In case of any bull trap sell-off due to low volume week ahead of us, I am looking at 543 to 541 area where I expect buyers to show up. So if that turns out to be the case, and then let's say we sell off under low volume, this is where I would expect buyers to show up, creating an inverse head and shoulder, and then heading back up to 565. Probably in the next 2 weeks, heading into the Fed rate cut on September 19th, and then placing new all-time highs. Both of those cases are bullish, with one of them providing some downside opportunities there. So far, any questions about our analysis on the S&P 500, team? How do we feel about this this analysis so far? Rihanna said bulls. I see. Bullish. I see. I see. Yeah, I think so too, Rihanna. I think it's also bullish. I don't like the downside to 541, but still looks bullish, so I'll take it. I don't think it'll happen either, Bahar. But this is the case, okay? We're going to have our stop loss at 560, okay? Um, if bulls do break 560 anytime this week, I'll be targeting the downside at those levels, and and the reason why I say it can possibly happen is because if this candle does break down, then this would really trigger some heavy selling, and I don't think it'll break down because of that, because this finally seems to be the deciding factor on the bull side. And if we notice here, for the entirety of the last 2 weeks, bulls have been maintaining higher lows, higher lows, higher lows, higher lows, higher lows, and they just look really bullish, if you ask me. We also had a lot of volume coming in on Friday session. The RSI is climbing up, and it just seems like bulls are going to step in and break all-time highs, because we're just right there at 565. And I also went through a lot of the stocks on my watch list, and stocks across all sectors are looking quite bullish, with a few exceptions such as Nvidia and some others. Looks like I should have held my calls. Dan, you had such a great call, man. You had the September 13 compared to us, who are holding the September 6th, which is this Friday expiration. Oh man, oh man. But all good. You secured your profits heading into Friday. I think you did amazing. You can always get back in, let's say on Tuesday's session, if anything. But please do remember, okay, team? Do remember, if we break below 560, do not try to see what's going to happen from the market from there. Just short it right away, okay? We're currently at 563.40 area. If we break below 560, which is this level right here on Friday's body candle, make sure you get a short position, because the momentum is going to be strong. As long as we don't break below that and bulls continue to step in, you can be bullish above 563 and get some really nice bullish day trades in towards 565. This is what I will be doing. Last few weeks, last few weeks, they kept buying 555 and 557. Yes, sir, I agree. September and October are bearish seasons, so I lean on bearish in those 2 months. That's fair enough, Oscar, but do look into this. Do look into the historical data heading into elections. And honest to God, I was doing some research with the team on Friday session. We were going over the charts on Friday session to see how the market usually behaves. And I have to say, yes, I understand that the market is bearish in those months, but for the times that the market was bearish on those months, it was when the market was already kind of going down or already had some bearish bias to it heading into September. And basically, heading into September, we saw that continuation to the downside or to the weakness or the selling that was taking place. Now, this case, it seems a bit different because we have been consolidating really well. And again, I'm not saying that we can be bearish. And that's why I'm saying if we break below 560, we can be bearish. But as long as we maintain above 563, times are different. There are times where the market can indeed be bullish despite historically being bearish. So if you really look at the seasonality in, and also if we take into account the election seasons, it is more likely for us to be bullish than bearish. But yeah, I do want you to also do your own research and be careful and take that data into consideration as well, Oscar. But yeah, so far, team, this is what I will be doing on the S&P 500. This is how I'm going to trade next week. I'm going to trade the upside as long as we're maintaining about 563.12 breakout, which we have a very, very clear resistance there. Bulls did break out above that resistance, but let's just say we get some volatility through Monday session, overnight Monday. What really matters is tomorrow morning. If bulls do get above 563.12, I'm going to wait there and I'm going to slap it with a call. That's what I will do. And I'll get some nice trades in as I usually do with my SPY trades towards that level at 565. All right. So again, the Dow Jones Industrials, this particular ETF, this index is really leading. If we look at QQQ here, this is where the weakness is currently. Nasdaq is weak. Nasdaq, aka QQQ, which represents the top QQQ, the top technology stocks. This is looking a bit weak. Okay, this is looking a bit weak, and I would still have to say, despite the weakness there, bulls were very resilient. Despite Nvidia earnings not going to the upside, bulls have been very, very resilient, and they have created this sort of curve. So if they do step in on Monday session and break above, you can draw this level here, and I'm drawing it based off those data points there. If they break above 477.85, just know they're going to rocket back up towards 484.55 and retest that level of resistance and even try to break out from it. If we do break out, we have a gap fill at 496. But I do have my doubts about QQQ. Now, we will take a look at some of the stocks that I am looking at for QQQ that can potentially push this particular ETF higher, push Nasdaq index higher. Now, this is IWM. IWM represents small caps, and so far, small caps are not looking too bad at all. It looks like we have a rally base formation, and the candles are very small. Whenever we see that the candles are very small, it's a good indication that bulls are getting ready to pretty much rocket higher, especially considering that we held the breakdown really well. We rebounded right off of that rising support trend line. We broke that level of resistance very easily, and now we have been digesting that move. So once we break out, my first target on IWM breakout is going to be 225, with my second target at 234. So the 234, if I go to the weekly time frame, this is the all-time highs at, this is pretty much the resistance just before the all-time highs at 244. So 234 is going to be the main resistance line, and I think bulls can easily pierce right through it if we do break 225. So heading into a lower rate cut economy, I think this is possible. So do pay attention to the Fed's rate decision into September 19th. And I think this is what IWM is doing so far. It's pretty much digesting that move and getting ready to take out 225 and then trigger that breakout towards 234. We can see we have been getting the 200 simple moving average line curving up. The 20 EMA line is curving up. Bulls have clearly maintained above the 20 EMA line, and they're getting ready for that expansion higher. All right, so now let's take a look at some of the stocks that can potentially push the Nasdaq higher or balance things out with Nasdaq. Why do I say that? Because Nvidia obviously does not look good, okay? Nvidia looks weak. We have a bearish engulfing on the weekly time frame, and so far it just does not look the best. If we see a setup like this, we want to stay out of it, okay? So we're going to stay out of Nvidia for now, and we're going to focus on other stocks that are leading the S&P 500. So with that being said, as well as Nasdaq. With that being said, let's take a look at some of the stocks that have the potential to lead this week's price action. We'll start off with Microsoft here. Microsoft has a rally base, and so far, bulls have held the support level at 412.73 really well. So considering that we have held support really well, buyers can show up and pretty much advance this price action towards 425.88 resistance level. We are still trading below the 20 EMA line, but there's a good chance that bulls are going to step in and first take it above 422 and then head towards 425. Once we break above 425, this can really advance from there. Even if we get a mini rejection, it'll just create a cup and handle looking formation. So it'll be something like this, where let's get that drawing there. It could be a rally, and then let's change the color to, let's do yellow. So we have a rally there, and now we have some sort of cup formation. It could be something like that, where we retest the resistance level there, and then from there just pretty much break out and head towards this main target there at 445, which is the gap fill there. So this is something that I am watching for on Microsoft. And I have a call here. I have a call which I shared with our weekly watch list team there. Let's go to our weekly watch list. I'm currently holding a call. I alerted a call on Thursday session that is currently down over $100. And I think it'll be a good discount for those of you that still have not entered to buy on Tuesday's opening session. So you can pick it up at 425 area, 425 premium, and get that $100 discount where we bought at 555. So the call is buy to open Microsoft November 15, 465 call. Yes, it's a very far out strike, but we will sell as soon as we go anywhere around the 430, 437s, 439, and even 444 before we reach our target. That I think will be a good trade heading into the next 2 weeks. All right. So far, any questions about Microsoft, team? If there are no questions, let's move on to our next analysis. All right. So for
Hey, buddy, I have a
now we are
question.
currently up over $200 on this trade, but it is still great. Okay. The reason why we're up $200 is because we bought it down here. We bought it when it was on a discount at the bottom here. And so far, this is what Qualcomm is doing. We have a rally here. Again, same setup. We got a nice rally there. Let me go ahead and draw it. Get that annotation there. So we have a nice rally. And so far, that rally has been, oh my goodness, look at that drawing, team. So we have a nice consolidation there. We have a bull flag. And so far, bulls are looking like we are going to break resistance at 175. And we're going to fill this gap here at 187 or 185, I believe. I think it may be 181, actually, if I'm not Yeah, so 181. However, do keep in mind, once we break 180, about 181, there's a great chance that we're going to advance all the way towards this gap fill and fill the gap at 193. However, my main target on this base rally is going to be around the 185s. By 185, I will get our team out of that contract that we're in for let's take a look. For Qualcomm, we're holding that June 20 230 call. We bought it at 620 and it's currently up $200. Now, what those of you that are not in this trade can do is you can buy the November 15 195 call for a shorter term swing trade, but maintain a stop loss at negative 35%. Okay, team? So this setup does look really, really good. For those of you that are in the June 2025 call, you can, our goal has been to hold as a long-term leap trade, hold until the end of 2024, and the contract can be a great investment for the future of this stock, the same way that we did with Apple, where we bought that long-term contract for Apple and it worked out really well. So yeah, even if you don't have the longer term call where you're up $200 and you're pretty much running you're running on profit cushion, what you can do is you can still trade this breakout of that bull flag by buying the November 15 195 call, and you can pretty much do a short-term swing trade, whether it be 2 to 3 days or whether it be a week and a half, and pretty much get out heading into next week for some nice profits on this breakout. You can even get out on the same day if you like, but so far the setup is really good. Bulls have been holding really well, and they finally have a close above the 20 EMA line, which tells us that they're going to step in for that nice expansion higher. All right, let's move on to our next analysis. Our next analysis is very similar to Qualcomm, WDC, Western Digital Corp. This stock has a nice rally-based rally setup, rally-based rally potential. So let me go ahead and draw that on our chart. We have a rally, and then we have a base formation here. And bulls are finally breaking out above that consolidation at 64, and they're looking to advance towards the first gap is at around 67, and then the second gap is at 72. So my target on this particular stock is 69 to 72. So let's take a look at our analysis there. For WDC, the trade setup is it's pretty much starting to break out from this consolidation zone above the resistance of 64, and could see another rally in the next 1 to 2 months towards 69 to 72. The way that I will trade the setup is I'm going to buy to open WDC February 21st, 2025 call, and it's going to be a 75 call. The strike is going to be 75 call at 3.80 to 3.50. It depends on whatever you can get it for on Tuesday's opening session. And the plan is to hold for 1 to 2 months into November. This gives us enough time. The strike gives us enough time for us to hold, and the strike is within our reach there. So again, WDC on our weekly watch list for this nice rally-based rally breakout. All right. We covered WDC. So far, any questions, team? Any questions on this particular setup here? So again, the call is going to be February 21st, 2025, 75 call. All right, let's move on to our next trade. Now, this trade right here, team, this trade has a solid fundamental, and I think it's a great buy for the long-term investment. So the way that we are going to trade Phillips 66, which is PSX, the way we're going to trade PSX is we're going to buy the January 2026, and we're going to pick up, sorry, not January 2026. Let me take a look at what contract I was looking at. I think I was looking at, or maybe it was January 17. Yeah, it was a January 17. So we're looking at January 17, and I'm looking at the 155 call for January 17. So this contract can be a good one. The 155 call has 472 open interest, but if you're buying one contract, it's not going to be a problem at all for us to get in and out of that trade. It's currently trading at 360, and it can be a good buy for a swing trade. So for those of you that don't have any of the swing trades on our alerts, you can pick that one up. I'll also try to alert it for our team. But so far, this is looking like a good stock for a nice breakout above its 200 simple moving average line, above the resistance level at 143 to get some nice advance going. This trade, I didn't share the analysis on our weekly watch list, but I will be watching for this week to pretty much build a position on it by buying the January 17 as a swing trade, and I'm looking forward to alerting it for the team. But again, you don't have to wait for me. If you don't have a lot of swing trades, you can pick that one up and get a nice swing trade in, just like how we provide at least couple of swing trades every single week, where we expect our team to cherry pick from them and take advantage of these nice setups that we are sharing on the weekly watch list. Now, do keep in mind, team, for those of you that are new to our team, you don't want to be buying all of them, okay? That's a bad strategy to do, because the reason why it's a bad strategy is if it doesn't work out that week, then you're going to have a lot of contracts. And even though the contracts are longer term and on the safer side of things, they're still going to affect you greatly, because if each position is taking, let's say, 20 to 25%, and you have, let's say, 5 to 10 positions, it's really going to add up. It's going to add up, and it's going to make you very, very nervous. It's going to make you panic, and it'll throw you out of many of the positions at a loss. And we don't want to do that. So you always want to have 3 to 4 positions at the very most. Okay, team? You don't want to have too much exposure to the upside, no matter how bullish you are. This is going to greatly benefit you on the risk management side of things. And the beauty about this is, like, let's say one of the trades goes wrong, okay, for that week. And even if we don't sell, which we recommend to take the loss at 30 to even 50%, but even if we don't sell, what we can do is the very next week, we can just get another trade and it'll work out really well, giving us 50 to 100% or even 150%. 125%, and it'll easily overshadow that contract that's down about let's say 25 to even 50%. Now the beauty is, once you secure profits on your other trade, and then you move on to another trade in the following week, what you can do is you just wait it out for that contract patiently, because you have a lot of time on, let's say, for example, we will cover WYNN, and WYNN will expire in January 6th, 2026. So let's say that contract will be down 30%. Once that contract recovers back up, not only did you make profits on the other contract, but you also made profits. You also made back some of your losses on this contract, which overall increase your account. Okay. Increase your pretty much, grow your account is what I'm saying. And this is a very, very safe way to grow your account by managing your risk, not having too many positions at the same time, but adjusting it on a week to week or 2 week to week or even month to month basis. Okay. So please do keep that in mind. All right. Don't have too many positions at the same time. Always have 3 to even 4 positions, but no more than that. This is how you manage risk really well. And even if the market goes against you for 2 to 3 weeks or even a month, you're not going to panic. What happens is it'll give you opportunities to trade the most updated market in the following week, without being in too many positions from the prior week that may not be getting the rotation that we were expecting it to. So now let's move on to Now Services. I've been sharing this stock about every week in the Sunday weekly watch list meeting. Although I don't alert it for the team because it is an expensive stock, I am still sharing it for those that are good experienced traders and that trade the momentum of stocks. Now Services is looking like we are going to continue to see a breakout towards the 900s. And it's looking really good. We have a major breakout on the bigger time frame, as we can see on the weekly chart. And it's looking like we're going to get a nice expansion heading into this week towards at least 870s and 880s. All right, so now that we have covered now services, this is for those of you that are experienced, you can trade it the way you like. I just wanted to bring it to you as a bullish momentum trade. All right, now team, I'm not too confident about this trade here, these two trades here, okay? I'm not fully confident yet, but hear me out. MPC as well as Velo, which are energy stocks. Now, I have not been too confident on energy stocks, and the reason why is because of the slowing economy with the Fed's rate, high interest rates being in motion. It slows the economy down, and when the economy slows down, that affects the energy sector. And for this reason, I have been staying out of energy sector over the last 6 months here, and that has turned out really well. However, now things are looking a bit different. I'm seeing some rotation coming into the energy sector, and that tells me that investors are expecting a soft landing. If we see a soft landing in the market, this means that no recession, and this could benefit energy rotation flowing into this particular sector, and the stock seeing some upside. So what we are seeing on MPC, which is Marathon Petroleum Corporation, is we saw a rally base and then a huge rally, and now that rally has come back down to retest its smart money demand zone. And so far, what we are seeing is we have a massive demand candle on that smart money demand zone, and bulls over the last 3 weeks have been defending really well, closing above the 20 EMA line, and they could be stepping in heading into this week towards the 188 area. So MPC does look like a good long-term swing trade. If you do trade this particular setup team, I would only do so by buying very long-term expirations, by giving myself plenty of time so that I give room to the stock. Okay. So let's take a look at some June expirations. If you're going to trade it, perhaps you could pick up like the 220 call, or sorry, the 210 call, currently trading at 8.0. You could pick up that contract at 8.0. If you have a large account, you can buy just one contract at 8.0. And that expires in June 2025, which gives you plenty of time for this move to play out back up towards the upside. Now, if you want to take advantage of it using shorter term expirations, you can pick up the 195 call currently trading. Not the 195. You could pick up the 200 call currently trading at 4.7. So the January 17, 2025, 200 call at 4.5 to 4.7. This can be a good contract as well. Let's take a look at the daily chart. This is the monthly. Monthly also is looking good. Daily chart is looking really good. This could be a good setup, okay, team? This could be a good setup. I want to bring it to your awareness because I am seeing, if it looks like a duck, it's a duck. And so far, MPC as well as some energy stocks are getting that rotation, and I wanted to bring it to your awareness and show you that the demand is definitely there, as we can see. Now, the other one is Valerio. This stock is also an energy stock, and as we can see here, they took out that big supply candle. Buyers are showing up, and this could get some steam towards 153 next. So Valerio also looks really good, and bulls can step in. So I'm bringing that to your awareness. And the way that you can trade it is, honestly, I would take the same long-term approach. I would do a swing trade for the 165 call, currently trading at 4.50 for January 17, 2025. You can have like a 30% stop loss, and yeah, you can reap the upside on this nice reversal that we are having, as we can see here on the daily chart. Now, team, in regards to the financials, I have been sharing the financial sector, XLF, and we shared the financial sector. If you were here in the last Sunday meeting, we talked about this breakout. We talked about the strength into the XLF, which are the financials. And so far, we are seeing this big expansion here with financials really leading the markets. Now, it is definitely overbought here, so we don't want to continue to chase it, but there are some particular stocks within that sector that can continue to see more upside, and that is WFC. So WFC here looks like it still has room towards 61, as well as Bank of America. If we look at Bank of America also, it looks like it has a nice rally-based rally setup where it can see more upside there. So let's go to WFC. Also, WFC, we have a rally-based rally, and so far, bulls is stepping in, and it looks like they can continue to step in. I'm not going to give you any contracts for this one. The contracts are already cheap for the long term. I wouldn't do anything less than the June 2025 calls because they're so cheap. But last week, for this particular trade, I mentioned the 62.50 call, and so far, this one's been doing really well. So if we go and take a look at the contract there, the contracts premiums, we can see over the last 5 days, the contract's gone from 2.5 to 3.8, which is pretty good, to 4.0. That's really good. That's at least a 80% profit there. All right, now we have covered WFC. I do have some bullish momentum trades for you here, team. I'm looking at ETN, Eton Corp, and this stock has a rally setup, potentially heading towards the gap fill at 321, and then the second gap fill at 332. This also, I would take a long-term approach by buying the January 17. It's not really a long-term. It expires in 138 days, but it has a good amount. So the way that you can trade this particular stock is you can pick up the 360 call. You can pick up the call for January 17, 2025, 360 call at 5.50, and pretty much take advantage of this bullish momentum trade and get out within a week or two on this bullish momentum move up here, and pretty much call it a day on this stock. If you notice, a lot of my swing trades, I like to give them time. I don't like to play the short term because that itself is a detrimental factor. When I do these longer term trades, I can, it balances out my risk to reward, and it gives me time. Okay, if I'm wrong, let's say if I'm wrong for a little bit of time, it still allows me to make profits off of the trade. And a good example of that was ALL, and we can see AL continues to go higher. We picked up ALL around this day right here. We picked it up around this day at 179, and it consolidated for 1, 2, 3, 4, 5, about 5 days. It consolidated for 5 days and then had the massive breakout that we were expecting. So this is why I like to give my contracts time, and it just works out really well. I like to trade the stock options the way that I trade long-term stocks. The reason why I do that is because it cuts out all of the short-term detrimental factors that are against options contracts, and it makes me trade a stock the way it makes me trade a options contract the same way that I would trade a stock. What I mean by that is, what kind of stock do you see going from $5 to $10 within a week or a week and a half? It's not a commonality, right? However, with stock options, you can pick up an option expiring in, let's say, June or something, the same way that WFC did, and pretty much you can make a nice 70% profit off of that move, and pretty much get out of the contract right there. And again, that does not happen with stocks often, but this is what I mean by trading options the way that I would trade a stock. So again, I'm not really expecting the contracts to go in the money and meet my strike every time. I'm not looking for that. If I go back to ETN to show you again, I'm not expecting ETN to pretty much go to 360. I will get out as soon as we go to even around 317 to 320. Pretty much taking advantage of that breakout move right there and then getting out of the option, because with options contracts, just like stocks, you can get out anytime you like. All right, so the last here, team, for my last one on my weekly watch list, I have Win. So Win Resorts is pretty much it's talking about this $12 billion plan, and what I like about this particular stock is that it's been hugging its downtrend pretty much over the last 3 months, 4 months there. And I believe when that happens, it leads to a massive short squeeze breakout. So do keep an eye out for win resorts. And the way that we will trade this particular contract, we will give it a lot of time. We will be picking up a January 16 WYNN, January 16, 2026, 90 call at pretty much 8.0. So we'll be picking it up at 8.0, and this will be a really good trade for the long term. Now, another one that we can do, another longer term contract that you can do if you don't have a large account. For larger accounts, you can pick up that sorry, not even the 90 call, honestly. Forget the 90 call. What you can do is you can pick up the January 16, 2026, the 95 call at 6.5, okay? You can pick up the 6.5. You can pick it up at 6.5 for the 95 strike expiring in January 16, 2026. However, if you have a smaller account, you can pick up the June 20, 2025 call, and you can pick up the 90 call that is currently trading at 4.70 to 4.80 area. You can pick that contract up on Tuesday session. It has a lot of open interest, and it's a good one. It's a good one to pick up with a lot of time, and it's a good investment. It's a good investment for where we are buying it at. We can see volume came in on Friday session, and the squeeze has not fired in a long time. And when the squeeze will fire, it's going to be on a major scale. Our first target is going to be 82. By the time we get to 82, the contract is going to be up a great amount, and we'll be nicely profitable there. So do keep an eye out, please. Keep an eye out for win resorts. I'm liking the contract. Again, if you have a smaller account, you can pick up the June 20, 2025, 90 call at 4.80 premium. And if you have a large account, you can pick up the January 16, 2026, 95 call, currently trading at 6.50, okay? 6.50 to 6.40 premium. That's about it, team. That concludes my analysis for today. Do you have any questions for me so far? We do have Rainbond going next. Rainbond will also be sharing her analysis as well. Let me check if Roger is in here to see if Roger will be sharing his analysis. Usually Roger will message me if he attends today's session, but I don't see Roger. So yeah, it'll just be Rainbond and I. Apple, can you go over Nvidia and give us support levels? Like I said, Oscar, I'm not feeling too confident about Nvidia at all. I think Nvidia looks weak, and it can see some downside there. And the downside, so if we go to the particular sector that is responsible for Nvidia, this is XLK. So the XLK, which is the one of the 11 sectors of the economy of the S&P 500, this is what it looks like. Just like QQQ, it looks like we are pretty much in a bull flag scenario there. And let's take a look at the stocks and analyze the stocks in here. So if I go to analyze here and wait for this to load, Microsoft is 21%, Nvidia is 20%, Apple is 5%, AVGO is 4%, ADBE is 3%, CRM is 2.6%, AMD is 2.5%, Oracle is 2.3%. So it is possible that these lower stocks here, now services, we already covered that. Qualcomm, we already covered that and said there would be some upside. It's possible that these other stocks on the lower end can make up for the Nvidia weakness there. And another stock that can make up for Nvidia weakness is Microsoft. And I think that's another reason why Microsoft is starting to show weakness, because rotation will be flowing into Microsoft from Nvidia. So now let's go back to Nvidia, since you wanted me to give you some levels. For Nvidia, I think major support is going to be around this level here at 110. So 110, I would be looking at 110 for a solid support level on Nvidia there. Aside from that, I'm not sure how to feel about Nvidia. It's just one of those times where you want to stay out of Nvidia and you want to be waiting on the sidelines until the stock provides a nice setup, or until the earnings IV and everything pretty much goes away. So far, because the stock just had earnings, it's a stock that I would like to stay away from. Now with Apple, I'm not honestly sure what to think of Apple here. Um, I'm not sure what to think about it. It is currently in a breakout. We have this nice rally-based rally. So bulls do have the breakout. They retested the breakout level, turning it into support and creating this hammer there. However, I do have my theories. Okay, here's what I think. If the market does end up creating a bull flag scenario where we will go down, then what I would anticipate is that Apple Apple would lead that downside market with Nvidia. So if, let's say, remember in the beginning of this session, we talked about if the market does end up doing a bull trap, because what happens is, like, a lot of times during low trading, low week, short week, we have low volume trading. And what ends up happening is we get a fake out to the downside. And then into the very next week, right on Monday session, where we return back to the full trading week, we just rocket back up and pretty much break above 565 resistance, which was the anticipation. So if that turns out to be the case, then let's say we get that downside, then Apple and Nvidia can lead that downside. Now, if that doesn't happen and bulls really continue to be strong, then my target on Apple is going to be 235. Okay, team. Yes, 235, this gap fill right here, and then the 236.46 resistance. We're very close to it, so I don't see why they wouldn't touch it, especially considering all of the good news that's coming up on Apple. And we also have the Apple event on the September 10th, where they're releasing a new iPhone. So if they're releasing a new iPhone and they announce new products, as well as some other positive catalysts, then it is very likely that they can break above 237 and get to new historic all-time highs. So that's my thoughts on Apple here. To be honest with you, I'm feeling quite neutral about it, and I would like to see what happens from there. Can you please suggest top 3 cherry picks for smaller accounts? I would say WDC, Rihanna. WDC would be a good one. Let's see. WDC, maybe WFC will also be a good one. And maybe Win Resorts as well. But aside from that, I don't really have much for the smaller accounts there. I will take a look at more. I'll take a look at more, and I'll share anything that I see. What's your Discord name, Rihanna? What's your Discord username? I'll tag you when I come up with some good setups. I'll do some research tomorrow. Oh, great, Yodo. Awesome, awesome, awesome. Okay, I got you, Yodo. Sounds amazing. I'm going to look at some cheaper stocks, some stocks on the cheaper end, and I'll let you know. I'll let you know for those that are under the $2 range, basically the $200 range. And yeah, I'll be more than happy to share. All right, team. That's all for me. I'm going to share. I'm going to pass it to Rainbond from here. And yeah, team, I'm very excited for this week. Honest to God, I'm really excited. Sounds amazing, Bree. I always see you in the live trading room, so I'll share any good setups on the live trading room. And team, do keep in mind, okay? I'm going to be in the live trading room, and as you guys have been seeing me there, what I love about being in the live trading room is that I've been going through all of the lists on the setup, and I've been sharing trades and even alerting them for the team when I'm in the live trading room. So I'll continue to do that. Sounds amazing, Maddie. Will do. That sounds amazing. Matter of fact, team, I'm really going to look into some of those cheaper end stocks, and I'm going to share them with the team. All right, let's Rainbond, are you there?
Yes, buddy, I'm here. I'm just
Awesome,
waiting.
awesome, awesome. Let me go ahead and give you host.
All right, let me see.
Team, while Rainbond sets up, I would like to mention, starting next week for the weekly watch list, I'm going to bring at least 3 stocks that are in the $200 range. 3 stock options that are long-term that fit my criteria for the long-term options, and I'm going to share them with the team from now. Okay, so starting next week, you can expect at least 3 nice setups, or at least, if there's not 3 nice setups, at least one or two nice setups that are cheap on the $200 stock, on the $200 price range and lower, for the smaller accounts below 5,000. So yeah, I'm excited for that. I'm going to do that for next time. And yeah, giving it to Rainbond now.
Thank you very much, Body, for an amazing analysis once again. And I will also look into that for the team, at least contribute at least 1 to 2 stock that are below the $200 range that are long term as well. Yeah, let me go ahead and go over my analysis here. Before we move forward, I hope everybody had a wonderful weekend so far, and we're gonna be closed on Monday, which is tomorrow, for Labor Day. So we have a nice rest for the week. So I'm gonna quickly go over my analysis here and stocks on the watch list. Some of them we're holding already, and some of them we're looking to basically buy in for longer term. So let me just first I'll go over a little bit of my SPY analysis here on the daily chart. So we're looking at the daily time frame here on SPY, and as I mentioned on my analysis on the posted on market analysis, so we have a we're setting up for a potential rally-based rally here on the daily time frame. So we have that nice rally advance. We created a higher high over this previous lower high structure, and we are nicely consolidating above the 20 and the 50 SMA line here on the daily time frame. So far, we have that very key support level here that we've been holding for a few weeks now at 555.04. That level is going to be a key support level that we're going to continue to watch on SPY. So far, we finally have a candle close here above resistance at 563.11. So what we're looking into for a rally-based rally setup is a continuation, pretty much like a bull flag scenario, where we look for a further upside towards the levels I mentioned there, for towards all-time highs and towards 570 or 580s area, touching this upper resistance level here on the bigger time frame on the monthly and the weekly uptrend line. So far, this is what I'm watching. So if we do see weakness below 555 level, this is the level that we're gonna, like I said, continue to watch. This is gonna be the 20 and the 50 support level for the moving average. So just keep that this level as keep it this level in mind, because this level will be very, very key for us, whether we're going to see a potential reversal back down for a potential higher low structure here towards 542s. But yeah, so far we are looking for more upside here. The TTM squeeze is still setting up towards getting a nice fuel towards the upside, and we are seeing a nice volume here on the daily time frame. So far, we're looking towards testing the new all-time high and around this, touching this trend line here, upper trend line resistance on the monthly time frame or the weekly time frame, which is this is right here. Pretty much is what I'm showing here. So on the weekly time frame, we have a 3 white soldier here, and we basically what we did here for the entire week is we tested the low of this this weekly candle here on August, the first candle in August, and then we tested that low at 555 that has been established as support here on the weekly time frame, as you can see. So far, bulls pushed through towards resistance, and we got a candle close there on the daily time frame, as well as looks like on the weekly time frame as well. So far, this is looking good, and monthly, we are touching above over the 30% RSI, 70% RSI here on the monthly chart, which signifies a melt-up operation. So this is a nice liquidity candle here created on a monthly time frame. So far, that's pretty much what I'm watching for the next coming week. We have 4 days to trade and look into some nice opportunities as well. So next one I'm gonna go over with is gonna be my watch list. So let me see. Okay, so I'm gonna go over Amazon first because I'm really liking the setup so far. So Amazon, we're so far we have a potential inverse head and shoulder here setting up on the daily chart. The stock is currently approaching a downtrend line here, major downtrend line on the daily time frame, right near the 50 and the 100 SMA line here. So what we're looking into here for Amazon is we're looking for a confirmed breakout above this downtrend line, which means we want to see a candle close above this resistance level here towards towards breaking this high right here, this supply candle on at 181.60. So if we see a candle close above that, especially if we reclaim above the 50 SMA line on the daily time frame, I think we can head towards immediately filling this gap right here at 184.10 area, and then testing this previous low higher levels, which is right around 189.50 to 190 or 181 range. Above that, for further upside continuation, we're looking towards this next gap fill right here, right at around 193, and testing the supply zone right here, which is right towards all-time highs, 200 levels, which is right around this level. So from 195.40 range towards 201.20. So that's what I'm watching also for Amazon. And if we do see the nice breakout above the 50 SMA line here on the daily chart, I think we may be able to potentially get that golden cross here on the daily time frame where we're going to see the 100 getting above the 50. So that's also what I'm watching closely. And we have a nice volume coming in on Friday as well, especially with other stocks on the watch. Let's see. So the next one that I'm watching, I did put in the, let me see which. Okay, so I did put in the dates there that I wanted to look into for that we're gonna pick up for Amazon. Let me just make sure. Okay, so the one I have here for short to medium term swing is gonna be the January 17, 2025, which is the 210 call, which is currently right at 3.80. If we can get it cheaper, either to 3.50 or 3.60, that would be nice to give us a little cushion. But yeah, so that one, and the next one is gonna be the March one for the 220 call, which is right at 4.72. Like I said, if we can get that cheaper, that would be amazing. And for longer term, which is for bigger accounts, I would suggest to pick up the June 20th, 2025 call. Let me just go over it. I believe that was the 225. Yeah, the 225 call, which is right around 6.85. And for stop loss for this one, we'd like to place 30 to 40% stop loss on our swing. But so far, this is looking like a good setup towards this supply zone right here, because we have not really seen a test there as well. And especially if we break this downtrend line on the daily time frame. And if I zoom out here, we have a potential bull pennant as well. So we have that rally, we have that nice consolidation, and potentially testing this supply zone. And the next one that I'm watching is going to be, sorry team, give me a moment. Okay, so I'm gonna also look into Charles Schwab. So I'm liking this setup also for the long term for banks. So far we have the symmetrical triangle here on the weekly time frame. So we do have that supply candle that was placed on beginning of July, and which is not too decent looking candle, but I think if we can get above a 67 area for this, I think we can get back towards 69.70 to $70. Retrace the basically halfway retrace this supply candle on July, which is right around $70. And if we do regain above $70, I think we can easily take out the supply candle, breaking this lower high zone right here around 73.45 to 79.80 area, and potentially break out from there. If this is indeed a nice higher low structure here for Schwab, then this will be really, really great for long term. He just pushed this. So this will be really, really good for long term if we do hold that level. This level of support has been a nice level of support for the past few weeks now. 61.09 is a level of support that we have been created. So I'm gonna keep a watch on this, and when we go on the daily time frame as well. So let me just sorry. Okay, so in going a daily time frame here, so we have also like a potential inverse head and shoulder pattern here on the daily time frame, and we have that TTM squeeze still fueling this potential upside. So once we break this zone resistance at 66.70 area, we could likely head towards this level at 67.30 0.40. And once we break this level, and especially if we really reclaim above the 50 and the 100 and 200 SMA line above 68.07 or 68.010, I think this can get a nice move towards those levels I mentioned, $70 retracement of that supply candle, and this test this supply zone right there. So yeah, this will be one that I am gonna watch as well. And for longer term, actually, this one is really good, I think, for small accounts. It is very cheap, and I think the $80 call for June would be good for this one, which is right around 2.35. If we can get that cheaper, that would be great as well. And for much longer term, I am looking at this call right here, the $80 strike, which is for January 16, 2026, which is right at 4.72. I think this will be a really good one if you want a little more time cushion on longer term leaps. But yeah, so far the June one is good, and I think March might be a good one as well for the $80 call. But we want to, if we want to pick up this one, we expect a big move right away towards, or an aggressive move for this one. But so far we have not really seen any break of structure here on the daily time frame. So I think it's better to give ourselves time. Yeah, so yeah, this one. And I know I keep going over UPS, but I'm really liking UPS for long term here. It gives me a Starbucks vibe, to be honest with you. So I'm gonna continue to share this with the team. Nice inverse head and shoulder here on the daily time frame for UPS, and we are still just basically we're just consolidating here with resistance right at 132.40, and with support right at 124.80. So as long as 124.80 continues to remain basically maintain above it, we can I think we can expect for a nice rally back up, reclaiming the 50 SMA line, which is right around 133.70. And if we see further strength above this level, reclaiming the 50, the next level I'm watching will be right around 139 area, above the 100 SMA line, and testing this downtrend line right here, and potentially filling that gap at 145, testing the 100 SMA line here on the daily time frame. Yeah, so far UPS, I'm liking this one. We'll continue to hold our January 2026 sleeps. I think this will be a really good one to continue to add for a longer term, especially if we're going into bear months with Christmas and holidays coming in as well. All right, so let me see. I think UPS might have really cheap contracts as well. Yeah, they do have really cheap contracts as well that are almost close to the money. So we may look into that as well. But for now, I will continue to hold that the January 2026 call that we have for longer term leap. And for the next one I'm watching is SQ. We are currently holding this one. So far, we are still consolidating inside of this range with support at 63.86, and we are slightly above the resistance here at 66.20. So we haven't seen a candle close above this downtrend line right here on the daily time frame. So what we want to see is a nice candle closing above 68.55 or even towards 69 to 70 for SQ to get some nice upside towards this level right here at 73.62. Above this level, we're expecting for, continued upside towards 76.43 and so on. But for now, we'll continue to hold this, and so far it's still consolidating here in the daily time frame. Okay, we did pick up PayPal this week as well, but I'm liking PayPal for a longer term. I believe we got the June 2025 call for this one. But yeah, so we recently we broke the downtrend line here in the monthly time frame for PayPal, and we have that nice liquidity candle here on the monthly time frame. So we tested that support on the previous month from earnings at 58.80, and that, as you can see, we have a significant buying interest, which pushed the price up, breaking above the high of previous month and breaking above the resistance level here on the monthly time frame. So the next level that we're looking into for PayPal, as far as for longer term, it's going to be towards 76.12. And if this level gets broken, I think we're going to get a nice squeeze to the upside for PayPal on the monthly time frame. As you can see, the TTM squeeze is nicely setting up for solid green bars to fuel this potential upside move. My target for UPS, once it breaks 76.04, the next target will be right around this level right here at 84 or 85 area to 93 to 100 levels for PayPal. So on the, sorry, let me just go over it. Yeah, so for the daily time frame, as you can see, we have that nice ascending triangle breakout here on the daily time frame. And as you can see, we have a potential zone consolidation here, a base formation. So we're looking for further upside here on PayPal as long as it can continue to have that 20 SMA line as continued support right above 68.20 for further upside towards that level at 76.04, which is our main resistance level that we're going to keep an eye on, whether we see a breakout or a rejection on that level. So let me see. So far, those are the stock that I have right now on the watch list. Let me see. Goog, so far, Goog does not look too bad here, but yeah, so we're still below the we still have not broken this downtrend line here on the daily time frame for Goog. However, we're still above the 200 SMA line, so I think that's good. But at the same time, we want to see Goog break the 170.40 level, this resistance level, so we can get some nice potential reversal to pan out within the next few months for Goog. We're gonna continue to watch this one, and we may pick up some. We may re-enter on some leaps again, but for now we'll continue to watch it and see how this one goes after their dividends. So for, I know Body already went over Apple, but yeah, I'm gonna go over it here quickly. So we did pick up an Apple shorter term call. I believe that was on Tuesday's session, and then as you can see, we got that retest off of this resistance level right at 233.08, and we saw a rejection at that level, and the next day we pretty much had a retracement to retest this base formation right here on the daily time frame. So far we have closed above the resistance level of this base around 288.26. Honestly, as long as we can continue to close or to basically close above 228 here on Apple, I think we can expect to test this resistance level here again at 233.08, and potentially getting that gap fill right here at 234.81 and test all-time highs, especially with their events coming up as well. Apple events are somehow a bit tricky, so just be cautious on playing Apple. Just make sure that you have stop loss and everything. But so far, Apple, this one is so far making higher high and higher low structure here on the daily time frame. So if we can draw this trend line right here, from here to here. So we can draw this trend line right here, and we look into it on the 4-hour time frame. So as long as this trend line continues to remain intact, I think Apple can continue to get a nice move up from this rally-based rally formation. So Apple daily support is right at 223.73 at the 20 SMA line on the daily chart. So if that level is broken, then we anticipate a further pullback to test the 50 SMA line, which is right around 221.70. If their let's say their event it did not go too well, or their Apple new iPhone release had some bad news or whatsoever. But yeah, so we test the 50 SMA line, and then we do have a few gap fill right here, right at 217.40 area for Apple as well, which is a good area for a potential higher low structure here if Apple or SPY does see some pullback here within the next coming week, or if this is indeed a bull trap. But yeah, so that's pretty much all that I have on my. If I do find something else, I will post it on our weekly watch list. And so far, that's pretty much all I have for today's team. Okay, so it looks like Roger is not in today. So that is all for us today, team. And thank you very much for joining us for today's session. Thank you for your time, and hopefully we can go over or make some profit for the next coming week. Tomorrow again is holiday, and so just enjoy your time. Don't wake up too early tomorrow. But yes, let me see. I have not looked into HD for a while, but I'll look into it for you real quick here. Okay, yeah, so far HD here kind of, okay, let me just chart a little bit. Okay, kind of. Okay, well, so far this has a potential symmetrical triangle here on the daily time frame. What's the name again? Sorry, see, Whitney. So we have a symmetrical triangle here on the daily chart. As you can see, we have a nice breakout with that bullish engulfing. We tested the resistance. We did make a higher high over this previous high right here at 376.30, and we from there we saw a rejection because this supply candle right here is hard to Supply candles like this is not easily get taken out on the first breakout. So as you can see, we got a rejection right there, and we got a retest on this downtrend line right here on the daily time frame. So as long as this can continue to hold above the 20 SMA, I think HD can get some nice further upside here. Maybe they can try again to break this resistance level right here at 381.90 area, and getting that nice retest off of 387 to 389, and potentially testing this high right here towards 400 levels for HD. But yeah, so far, as long as it can remain above the 20 SMA line as its support, it can continue to push up here. We do have a nice candle right here on the daily time frame, which is looking like a bullish hammer. But yeah, so if they can form a base formation right here with support right at 364.20, they can continue to make a base formation instead of falling below the 20 SMA line, then we can further expect those upside for HD. Okay, yeah, so for Mara, we're still holding that one for the long term. So we're still up a little bit on this one, but I kind of forgot I did not take profits on it. But yeah, so far Mara here on the daily time frame, we're still inside of this consolidation on the daily chart. So as long as, like I said, this support level doesn't get broken at 14.13, we'll continue to hold that leaps. And so far, we may have a potential cup and handle here actually forming on the 4-hour chart here for Mara. So we'll see how this pans out within the next few weeks, especially with Bitcoin and all that. But yeah, so far, continue to hold that one. We have a lot of time on it, and yeah, so we can continue to hold it for now. Okay, Sophie, let me see. Okay, so Sophie is, let me just go on the weekly chart here. Okay, so Sophie is currently testing this downtrend line here on the weekly time frame. So we had some nice upside last week, last 3 weeks actually for Sophie. We printed that this candle is pretty much a 3 white soldier, and we got a nice follow through move here towards 50 and the 100 SMA line, and testing that downtrend line on the weekly time frame. So for this one, it honestly doesn't look too bad at all. It looks like it may try to break out of this downtrend line here. So they may try to test this level at 907, which is the previous supply candle right here that was on basically printed on March. So if we can break this supply candle right here, this could be a potential trend reversal here for Sophie, especially that we have been making higher low structure here as well on the weekly time frame. So if we do break 907, we may continue towards 10.38 or 10.40 area, and towards this peak right here at 11.70 for Sophie, as if we break out at above that $9 level. The TTM squeeze honestly looks really good here on the weekly time frame, and there's also volume coming in. So I think if we can see further upside from here, I'd like to see that break of $9. And if we see further upside or further strength above 11.670, then we are looking towards testing this previous support level right here, which is right around 13.50 area for Sophie. But this one honestly looks really good. I think Chris called this out. Really, really great trade for this one. Okay, PLTR. Let's see. All right, well, looks like, so for PLTR here, let me just move. As you can see, I have not looked into this chart for a while. But yeah, so far PLTR here on the weekly time frame. So we have that nice rally. We had a base formation and we had a breakout candle on the weekly on, I believe that was on earnings. And as you can see, we tested this high right here at right around $27. And we saw some selling or we saw some profit taking there. And now we're basically retested the zone resistance. And as you can see, buyers continue to step in, created this resistance levels as support. And we head towards a higher high over this previous high right here at 29.36. And wow, another earnings break. And as you can see, for this one, honestly, if we can consolidate right here, we can form a base formation on the weekly time frame for PLTR with support at 29.36. This can be your stop loss if you are looking to trade this one towards 35.33. But yeah, so as long as it can hold this resistance level, turn into support or digest this earnings right here, earnings move right here, then we may see some further upside to test this next resistance right at 35. And the next one is going to be right around $39 to $40 for PLTR. But so far, this has been getting some nice buying interest here on earnings. So yeah, I think this might be a good one to for momentum trade, I would say. Yeah, so okay, let me see. So cat, oh wow. Cat, we have a nice bull flag pattern here on the weekly time frame. As you can see, we retested this lower trend line support 3 times now. The third time we tested the 50 SMA line, and we printed a bullish piercing candlestick. Closing above the 20 SMA line on the weekly time frame. And as you can see, we have consolidated above that. We never gave this up. We never gave up the 20 SMA line. Bulls continue to hold that level and continue to make higher low structure from there. And now we're testing the upper trend line resistance for the third time here for CAT. So this one might be a really good momentum trade for the next coming week. I think especially with the rate cup sorry, rate cuts. Sorry. All right. Yeah, especially with a rate cut coming in. So I think this one may once we break above this bull flag resistance right around above 363 or 364 area, especially if we break 369.77, this wick right here, this previous lower high. I think we can get a nice move towards all-time highs and 400 levels for CAT. I think this one will be a good momentum trade. I think 400 to 420s for longer term opportunities for CAT. And as you can see, this is not the first bull flag. There's another one right here, another one right here, pretty much another one right here. So this has been in a really strong uptrend above all moving average here for CAT. So this seems really good. As you can see, like I said, the TTM squeeze is setting up nicely. So as you can see right here, we fired that squeeze, and we may see a nice squeeze formation here, firing the TTM squeeze to the upside with the solid green bars. Yeah, so far this one looks good. If you do want to trade us for a long term, or if you want to just trade it as a day trade, then you can. I would say, let me go ahead. I would go ahead and I'm gonna draw this zone right here. And as long as it can continue to hold 347.30, that will be your stop loss above the 20 SMA line on the daily time frame. If we do break that level at 356.80, then we can head to test this bull flag resistance, which is right around 360 to 363 area. And like I said, if we see a confirmation breakout, especially if we take out this wick here above 370, then I think we can head towards testing 370 to 380 all-time highs and towards 400s level. But yeah, that is pretty much all. Okay, so far it looks like we've covered everything pretty much. And thank you very much, team, for your patience with us. And um, okay, thank you very much, Ash, Kevin, everybody here. You guys are awesome, and hopefully we can make some great trades next coming week. And please don't try to wake up early. Have some nice time, sleep in, and enjoy your time. I hope you guys have a wonderful rest of your night and or day, and take care, team. All right. Bye, everyone. Thank you, Ree.